What's up, guys? Welcome back. It's Jerome. I want to take you through the 8 trade setups that have kept me profitable. I've identified these myself. They're very simple to learn and they all follow very strict rules. The rules are simple. Liquidity must be broken. Don't trade open session, meaning I won't trade at London Open for the first 30 minutes or for the first 15 minutes as long as there hasn't been any kind of crazy volatility. If I see that there's been a volatility spike, then I will look at trades afterwards. But I wait until the volatility spike has already occurred because I don't want to get swept out of a position. I always move my stop up at the 2-1 unless my target is the 2-1. I risk between 1 and 1.5%, just kind of depending on what size I enter with. My best advice to anybody learning how to trade the stock market is understanding how to find heat map, order blocks, and icebergs. And you can use this. You can use some of the indicators that I will show you, and also how to identify proper order blocks. So first things first, I'm going to take you guys through the 8 trade setups that I use to keep me profitable. The number one trade setup is a 2-legged drop. So we have a leg up, a small pullback, and another leg up. I look for a failure of that leg. The failure usually looks like 2 small red candles. I, at that point, will short it for a push below this liquidity, and it works at least 50% of the time. Trade setup number 2 is the follow-up to this. The follow-up to this is after this trade comes down and breaks liquidity, I look for a bullish move back up, at which point I take a trade long and I target the highs and I move my stop to break even for a push higher. Okay? Sorry about that. Okay, trade setup number 3. Trade setup is number 3 is where I lost the majority of my money trading because it was based off of something called a 3-line strike, and a 3-line strike does not work very well. Essentially what you have is you have a position, you will have the underlying will come down, pull up, and then consecutively drop lower and lower. What I'm looking for on these positions is as soon as there is a sweep of liquidity, I will look to take this long. So as this starts to push up, I will buy this, putting my stop here, and I target at least a break of the first high. And that is what the trade looks like. That is trade number 4. Trade number 3 is where I make the majority of my money. Because in the past I was always trading this, expecting this to break and continue higher, I never realized that what we were interacting with was a new order block that was being formed. And these consecutive lower attempts were actually showing more weakness. So when this price actually comes up, when price actually comes up into here, this is where I look for weakness for a final time. As I see the weakness happening, this is trade setup number 3. This is my big short position. And you can initially move your stop above the order block and you look for a break of the lows. However, once it does confirm and continue lower, I will move my stop up to the top of that pivot, and once we get close to breaking it, I'll move my stop to break even. And that's trade setup number 3 and 4. Trade setup number 5 is a variation of number 1 and number 2. So number 1 and number 2, again, we have a leg up, a small pullback, and a continuation, and then a pretty aggressive drop. In the event we break a pivot, push back up, and start to fail, then this is actually just a head and shoulders, and I will short this instead. This is where I can be wrong sometimes with number 2. Number 2, I'm anticipating that we'll pick up the liquidity. Instead of dumping, we'll actually continue higher. In the event that it attempts and starts to fail, I will look at this and assume that this is actually a short setup. And at that point, all I will do is enter the short, put my stop above the current candle, and I will look to target and take out the lows. That's setup number 5. Setup number 6. This is what I talk about in a lot of my videos with the U-shape conversion. This is when structure has been moving along like this and is suddenly broken. And instead of pulling back and dumping, it pulls back slowly, 3 candles with a consecutive higher close. If I see that, I will immediately buy here, and I will put my stop below here, and I will target a full fill of the initial move. And what will tend to happen is this ends up being just a liquidity sweep where you have this order block. And this can also turn into trade setup number 3, or if it does break higher, you can now identify that there's been a change of market structure and you can start to trade this high. And this also pulls into trade setup number 1, aggressive push, a pullback, a break above. We look for a sweep of liquidity and an attempt. We can take this long for a continuation higher, or if it fails, this is setup number 5, a head and shoulders, and I can short this one. Setup number 7. Number 7 is very easy to identify. You have an aggressive sell-off that takes place over a small period of time after breaking structure. And just like number 6, you, instead of getting a climb up of 3 candles, you actually get an aggressive vertical push. It looks like a backwards check mark. There is no reason for this to fail other than an accumulation of liquidity. This, to me, is a serious attempt that we are going higher. In the event that you take this backward check mark move, which is super simple to identify, it's accumulation, a drop, and a vertical push up, very straight up push. In the event that this actually comes back down and breaks the low, this triggers setup number 7. Setup number 7 is fully all about liquidity. So now we have a pull on liquidity after an aggressive attempt higher. As the market starts to push back up, I will buy, and I'll put my stop somewhere in the middle of the bar for an attempt at a break of these highs and a new uptrend. This is how I make the majority of my money. I would say trade number 7 is my biggest winner, because it tends to actually be a market reversal signal. It's a beginning market reversal signal. Unlike number 6 and number 3, where we are getting in after it breaks a level, pulls back, and continues, we're anticipating that the market is actually going to change directions entirely, pull up here, pull back, and continue higher. And that way we can get a great risk to reward on these. Yesterday I took a trade and it was a 13-to-1 risk to reward that I won, and it only took about 10 minutes to win this trade. Which brings me into my final trade setup, which is a little bit more difficult to identify. And we have some, I have some examples that I'm going to show you next. Market open, a sudden drop, and then aggressive correction. And then the market starts to pull back. Instead of suddenly continuing higher, it just keeps getting closer and closer and closer. Once it gets to this point, this is trade setup number 8. What will happen next is the market may pull back, and then it dumps and breaks this low here. And then what I am anticipating on a break of this low, and it has to happen fast. If it comes in here and pulls back and does this and then breaks it, it's not valid. Okay? But if it breaks it fast, what this is showing to me is that we're going to attempt to start an uptrend. But liquidity was taken out. A lot of liquidity is in a candle like this. A lot of liquidity is in a breakout like this, because everybody's piling in orders. And then suddenly, because it was market manipulation and the market had just opened, we just get these really aggressive sells, aggressive sells, aggressive sells. So much liquidity gets built up. And then as I start to see this climb back up, I will go long with a very small stop, targeting a break of these. Because what I am anticipating at this point is that we are now going to start a channel. And this happens quite often. In the event that it in fact does not start a channel, you'll know, because what will happen is it will come back up, attempt to stay in this channel, and it'll struggle to get past the first pullback area that it was in. If it does this, well, you can close out your trade or move your stop to break even. But if it does not do this, you have a great risk to reward on these trades. Okay, and now let's get into the examples. So the first one is trade number 7. Trade number 7, we have a break of liquidity here, and then we have an aggressive V-shaped correction, right? It's gone down and straight up. There is no reason that this shouldn't make the highs here or attempt to push here, because there was aggressive active buying. Okay, it's swept, and now we look for a breakout bar to the upside. Here we have a breakout bar to the upside. As this is breaking out, we can anticipate here that we're getting a nice solid breakout, and we can put this below the structure. Now we're anticipating that we have an early entry on a new uptrend, and our first target should at least be a break of these highs, which gives us a 2.41. Our second target is a new uptrend, which means a break of these, and that's a 4.36 to 1. So it's a great trade entry. And the way you identify this is a backwards check mark. It falls down at an angle and then aggressively pushes vertically up. The next one is number 1 and number 2. We have an aggressive breakout. Okay, it comes back down and it makes another aggressive breakout attempt, and it cannot break the high. And here we have our liquidity area, and we also have liquidity here. So I probably would have taken a loss on this one. So one leg up, second leg up, it fails. I can see that this is failing, so here I can take a short, and I want to target a break of this liquidity, and then I want to look for a high candle to get back in. So as this comes down and breaks liquidity, as this pulls up and pushes and it gets close, my stop can now go to almost break even. It breaks this liquidity, and now I need to look for a bull reversal bar, and I do not get one. Instead, it pulls this liquidity, at which point we get a very strong bull reversal bar. So we can anticipate that this is in fact going to attempt to make a new high. We can put our stop here and our target break of the highs, which is a 2.3 R, which is a great trade. Okay, so again, one leg up, two leg up, a third attempt here. So this is actually the first leg, a second leg, and it fails under liquidity. You can short at the failure, anticipating that all we're looking for is to pull liquidity, get rid of the trapped retail buyers, and then go higher. So we short, comes up, comes down, breaks it. Now we can look for a long. We get 2, 3 consecutive bull breakout bars, and I want to give you guys a little pro tip here. If you look very closely here, you can see a very bullish candle. What people don't realize is when you see a doji candle like this, a falling hammer, if that wick is filled on the next candle, that is a very bullish sign. So we have a open wick here, and the next candle fills it. That is a very big buy signal. People think these are bearish. They're not, okay? Just because you have a wick that pushes down does not mean anything. It just means that there are passive sellers. People had sell limits here, okay? But buyers won. So in the interim, in the short term, we're in a buyer market right here. Same situation here. Active sellers tried to push it down, but this is actually entry number 6. We have an aggressive sell-off. We have 3 consecutive higher green candles. We have 1 pullback and a bull breakout. We buy at the bull breakout. We put our stop here for a break of these highs. And unfortunately, in this situation, it didn't work. And the reason it didn't work is because we did not pull liquidity here. okay? We have to have a pull on liquidity for trade number 6 to be valid. Okay, so that's trade number 1 and trade number 2. Let's continue. Trade number 5. And this is also trade number 1. Okay, we have a aggressive push and a second push with a very small pullback. Very small pullback pushes tend to reverse hard. So I am looking for trade number 1 on this. We break highs and I'm looking for a short. I have a short here and we get stopped out. We push aggressive highs again and we have 3 black crows. This is a very bearish reversal here. So our initial entry is like this. We put a stop above the highs and we target taking out this liquidity to look for a bounce to the upside. So we get our target. It's a 1.55 RR, which is not great, but that's okay. Trade number 1 is not the best. It's not the best because it's not a good RR, but I still take it for scalps, not a problem. Here we get that bounce. We took out liquidity, now we want to see price continue higher. Okay, we have a great RR here, it's 2.5, 2.6 to 1. Okay, and what happens is it comes up and it prints this and it breaks the low. So now we can anticipate that this is in fact trade setup number 5, which is just head and shoulders. As we come and push back down, I realize I'm about to get stopped out and I flip the script. I enter a short position and I look for a break of the lows, which is a great trade. And sure enough, I get it. Now I put a question mark here to see, is this trade number 8? We had a consolidation, an aggressive push up, and now we see that it's going to break the lows here, create liquidity, and start a new uptrend, which is what other people are going to be seeing. This is a downtrend. We had a failed breakout. But because we did not break the lows here, instead we pulled back up and messed around for a while, this is not a valid trade 8 setup. A trade 8 setup, we would have an aggressive breakout after consolidation, around market open. It would immediately come down without much resistance and break the lows, filling liquidity here, right? And then we would look for a bounce and we would take that high, we put our stop below the bounce and we would look for a break of the new highs, all right? And that is not what happened here, right? It messed around for too long and then broke it. So it's not a new uptrend, it's probably starting a downtrend. But that is trade number 5. Okay, trade number 1 and number 2. Okay, we have pull up, starts to fail, consolidates, pulls up, and then we get a really nice signal here, okay? Have we broken liquidity? Yes. Did we correct back below it? Yes. We have 2 red candles here. I'm willing to short this, and I want to see a break of the most recent liquidity, which is here. Okay, we get a break of the liquidity, and now we can look for a reversal and a continuation, I'm sorry. So we get out here, and now we're looking for a strong closing continuation, which we get here. We can enter, and we can put our stop here for a continuation to the upside. Waiting to see if we can get a good trend, right? And this is our target. Now, on a break here, you can choose to put your stop below this previous, like so, or because if you're more confident like me, I will potentially move my stop down here just to wait and see what happens, because I do see that attempts are being made. As I see this happen, I'm most likely going to move my stop here, and I would have gotten stopped out anyways. But on the 3rd attempt here, we did in fact get a breakout where we can risk $500 or 1% for a break of the highs, and we could have recouped our losses. So trade number 1 worked out on the the second try. So we took 1 loss, 1 win, and then here we took 1 loss and 1 win. But our wins are bigger than our losses, so this still would have been profitable. Here is trade number 3. Okay, trade number 3 is where I make a lot of my money. Trade 3, trade 7, and trade 8. Here we have consolidation. It aggressively broke under this, right? And then we got trade number 4, which is completely valid. 1, 2, 3 consecutively higher small green bars following a sell-off. So we go long on the first pullback, we get a pullback, we go long right here, we put our stop underneath the first bar body, and we look for a break of the previous structure, which is here, which we get. It almost gets into the order block, and then we get a reversal signal. The reversal signal is valid, so we can take this here, looking for a break of the lows, which we also get. So that is trade setup number 4 and number 3. As price is coming down, this is actually quite good setup for trade number 4 and number 3 as well. We get a drop, another drop, and a very big bull breakout bar. We get a pullback, and then it holds the low. Anticipating that we are going to hold this big breakout candle, you can take a buy position as it starts to hold it, putting your stop here, taking a very small risk, anticipating that we'll break the highs here, which is a 2 to 1. But I don't think I would have taken this trade, to be honest with you, because it doesn't look perfect. As we continue on, the last few examples. This is trade number 8. Right around London Open at 3 or 4 a.m. Eastern Standard Time, we get a consolidation, we get an aggressive break down. So this is point 1, point 2, point 3 is a break of liquidity, and then we get a confirmation. So we take this short, anticipating that we are going to start a downtrend. And we can just target the lows here for our first take profit. And sure enough, we do actually start a downtrend, and we do not get any decent pullback until almost a 4R. So we could have been in this trade. We see that it created a new high right here, didn't break structure, instead held and fell, and we could have potentially stayed in this trade for quite a while. So that's trade number 8. So again, we have an aggressive breakout, and almost immediately the breakout gets snuffed. Then I look for the actual move to occur. Right? This is a massive manipulation of liquidity. Here's trade number 7. Okay, trade number 7. We have an order block, pushes, rejects, falls, vertical check mark. Okay, this comes up. This should break highs, but it doesn't break highs. Instead, it breaks the low and then prints this really great bullish structure here. This is a very simple buy. Stop below here, and we look for a retest of the highs here, which we get at 2.78. As it moves in to take these highs out, it actually does over here. We can just close out the trade, anticipating that the move may continue higher or the move may fizzle out. In this case, it did fizzle out, but we still got a great entry. Okay, this is trade number 4 and number 3. This is outstanding. Okay, so we have an accumulation which is broken, tested, broken, tested, broken, tested, broken, tested. Consecutive lower attempts. Okay, this is showing me there is massive weakness, but it's going to continue testing this level. So on a break of liquidity, I can look for a long. And sure enough, we break liquidity here and we get a very nice bull candle. We buy here, put our stops here, and all we're looking for is a reattempt of a break into this level and a test of the previous highs, which we get right here. We can close out for a nice 2 to 1, and then on this bear bar right here, we can actually flip the script. What happened? No. We can flip the script and we can just short here, and then we can put our stop above the order block, and we could look for a break down below, which we get almost immediately. But I want to see this continue into an actual downtrend. As we see this continuing, we can continue to trade this, okay? Like so. We get a breakdown, we flip the script. So we take it long, we close out. We get a short position, we go short. We put our stop here, we get a break of the lows, and we win 2 trades in a row. Then, as we break the lows here, we get another buy signal. So we can take this buy signal here, putting our stop here, we look for a retest of the order block, we get it. Then we get a rejection of the order block. Again, we're shorting. Looking for a break of the lows. We get it. Okay, it breaks the lows here. Where do we get a really nice buy bar right here on the 2-minute. Again, we can take this long, putting our stop just a little bit below. A test of the order block. It comes in and tests the order block. We get a win. We get another bear candle. We take this short again for a break of the lows, which we get again. This is such a nice rinse and repeat move. You could potentially just take 50% off your shorts as it breaks the lows. As it comes back in, add back to your short position. As it breaks the lows, take 50% off. As it comes back up, add to your short position. As it breaks the lows, take 50% off. And you want to wait potentially for a break of the channel and an actual aggressive move, which we end up getting here, right? We get an aggressive move here, and we could have potentially pocketed a 5R on this trade. Okay, final few setups. Aggressive leg up, small pullback, aggressive leg up. I'm looking for a failure here. We get 2 red candles here. Okay, we can short this, putting our stop above, and we would have gotten ticked out for a loss, which is very frustrating. But we're looking for a break of liquidity here, and this is actually a decent move. So say perchance we put our stop a little bit higher, or we just get back in again. We're looking for a break of the lows liquidity. Here we had a break of the lows, but we can either take profits at this level or anticipate will fall and actually break the primary pivot, which is what I'm looking for. I'm looking for a break of the primary pivot. It took a while, but we did get a break of the primary pivot. And now we can simply look for a long position for the trend to continue. The trend, as we get out here, we see a trend continuation. We get a pullback to the mean, and we can go long here with a stop right here, targeting a break of the highs, which is a 6.93 to 1. Unfortunately, it broke the lows. Because it broke the lows here and we are below the 50% retracement mark, I am actually going to take this short, and I'm going to look for a break of the primary low, which we get. And it's only a 1.5R, but that's fine because it does technically continue much lower. Okay, trade number 6. This could also be trade number 3, but we would have lost on this trade. So here we have an order block right here. You see this? This is our order block. We have a 3-line strike, we have a break, and we have 3 consecutively higher close candles. We have this one weird candle, but if we're on the 2-minute, we see this close, dink, dink. Technically 1, 2, 3, we can enter long here with our stop below structure, and we want to look for a retest of the order block, which is a 2.3R. Okay, we get this trade, and then we say, okay, maybe this is trade 3 short. We get a double red on a pullback to the mean. We short, we put our stop here for a break of the lows, which would have been a 5 to 1 risk, and instead we broke above. Because we broke above, we can start looking for trade number 1 and number 2. Okay? We had a strong leg, a pullback, a strong leg. I want to see liquidity get taken out, and then I want to look for a high, a bullish position. So here we have attempts to go and break back above. We do not pull liquidity. Instead, we get a breakout bar. So we do not get entry number 2. We do have an entry number 1, but it wouldn't have broken the lows. We get a breakout bar. We can take this long, looking for a trend continuation, and a break of the upside, which is here, which is a 2.3 to 1. And now we're actually into already another trade. We have one pullback and a second leg. Okay, now I'm looking for a failure below liquidity to take this trade higher. So as this makes a second attempt and it gets stuffed, I am looking for a short to take out liquidity. I can short here, seeing that we're actually pushing down. We failed to make new highs, and now we're pushing down below to break it, and I can look for a pull on liquidity. I'm sorry, I messed this up. This was the second leg attempt. We start to fail here, I go short, and I put my stop here for a break of this low. We get a break of the low, and this is a nice 2 to 1. We get a break of the low and we get this aggressive bull bar. Okay, I want to get into the mean, so I'm looking for a pullback. We get a pullback. I buy here. I don't want to just get stopped out needlessly, so what am I going to do? I'm going to put my stop below this bull breakout bar, and I'm going to look for a break of the highs, which we get, and that's a 2.69 to 1. Trade number 5, which is a short, we get an aggressive push up, and then we get a break of liquidity. A break of liquidity, it attempts to go higher, and then we start to get this. We have an order block here on the 1 minute. This is a doji candle. A doji candle on a smaller time frame is an order block. People were buying, people were selling, but who won? Sellers. So as I can see, we're struggling in this area and we get a bearish breakdown. Okay, we can short this and put our stop above the order block, and we want to look for a break of structure, and a break of structure puts us right here. This is a 1.28 to 1, so it's not amazing, but as we see here, it pushes up, fails, pushes up, fails. As it starts to fail here, I am going to move my stop up to above these bars, and now my risk is 2.8 to 1. We get a break of the lows, and now we move in and we see that there is a trade number 6. Trade number 6, we have a push, a pull, a push, and just like on trade 1, it's 2 aggressive pushes with a small pullback and it fails. So this is technically a trade 1, just inverse. 1, 2, 3 higher consecutive bull bars. It doesn't matter how small they are, but the body close here, and a little bit higher here. So we buy, we put our stop below structure, and we look for a break of the highs, or at least a test. So we look for a test here. This is a 3.83 to 1, and we win this trade. Okay. Now here we have liquidity that's been drawn out. Okay, this is the liquidity point, and this is going to show us our next few trades. So price has been moving through liquidity and it has not broken it. Here we get a break and a very convincing attempt higher, which fails. So now I know liquidity has been broken and I am looking for a trade that I can take. Trade number 3 and number 4. Okay, so we're looking for a break of this and a retest higher. So here we get a break of the structure. We get 1, 2, 3, 4, 5 candles. This looks to me like it's making an attempt higher. So I can simply buy here, put my stop below the structure, cutting off the wicks, and I can look for a retest of previous highs, which is a 3 to 1 right here. Okay, as we move into that previous order block, that previous liquidity, we can see it's struggling here. So what we can do is take our short position when we see an actual break, and we can put our stop above the order block for a break of the low, which gives us a 1.74. Or we can just put it above this structure, but we would have been stopped out. So you can do it however you want. I personally probably would have closed the trade as I see this aggressive push up here at break even. And then I can see that we make push, push, and this is a reversal signal right here. There's no serious pullback, it's just buying into a level. There's an accumulation of active buyers, and sellers are probably going to be picking up the bids. So as we see here, we have 3 black crows, a pullback, and a continuation. I want to go short here, putting my stop above the highs for a break of the lows, which is about a 2 to 1, which is completely fine. Okay, as we move forward, I think we're almost done here. Trade number 7. Okay, number 7, we have a aggressive fall that is actually, okay, it's not an aggressive fall. It's small candle falls followed by an aggressive push up. It looks like this and a vertical attempt. So we're going down, straight up. This should make an attempt on the highs. However, we pick up liquidity and then we print a very nice bull bar. So on that, I would enter, putting my stop below the bodies of these candles, and my first target would be an attempt to break the highs, which is here, here, and here. which we got all of those, and we actually ended up coming up into our liquidity point here and breaking it and starting a new uptrend. So now we have market liquidity, and we have liquidity here as well. So as this is moving around, we find that this is aggressively broken down and created an order block. We have an aggressive breakdown, and we have a very convincing attempt to go higher. This should technically interact with this order block. However, what happens? We come down and we sweep that liquidity and then print a really nice bull setup. Again, I'm long, my stops are below the body of the candle, and I want to see interaction with at least this level and this level. And what happens? Do we interact with the level? Yes, right here we tap into this area, okay? Here we have setup 1 and we have setup 2. Setup 1 and setup 2 are my scalps. They work more than 50% of the time, but they're not always the best risk to reward. So we have a leg up, a pullback, and an aggressive pushback up. Okay? We don't really see a sell situation here except for this candle. But I don't like these candles. I want to see where we have liquidity fill. Okay? Liquidity fills to the upside, and then we get 2 red candles. So I'm thinking we're going to sweep the liquidity here or here before continuing higher. So I'm going to take a short, stop above here. I'm looking for a sweep of at least this liquidity and hopefully this liquidity. Okay, so we want to see interaction of these highs. It comes down, it breaks, and we get a win for a 1.23 to 1. Here we have a bull breakout. It pulls back to the mean. I'm okay taking this. I want to put my stop below this, and I want to look for a break of the highs here, which we get, and this is a 2.45 to 1. Okay. We have liquidity here, and this is old liquidity, but you can see how it actually interacted with it. But we have liquidity here, and we have trade setup number 1. We have an aggressive push up and an aggressive push up again. Not any real pullback. I want to look for a failure to pick up liquidity. Here we have a very, very bearish signal, and I want to see it drop through here and take out this liquidity. But guess what happens? It doesn't work. We do not break through liquidity. Instead, we push back up to the mean. This is showing me that we are most likely going to continue higher. But because we did not pick up liquidity, I cannot take this trade higher. In order for me to take a trade higher, at least somebody has to get screwed over. That's how it works. If the level is very obvious, I want to see stops get taken out before I enter my trade. All right, there's this quote in Gladiator with Russell Crowe where the old man goes, "When enough blood has been spilled, then perhaps you will have your freedom." And I just feel like that's how the market is. If there is a very obvious level, or there are 2 obvious levels, enough people need to be screwed over before the market takes the move, does the move that it's supposed to be doing. When enough blood has been spilled, when enough people have lost their money, then the market will move. The market does not pick up liquidity here, so I don't take the trade and I miss out on a good move, but that's fine. Here's trade number 5, an aggressive push up, a second push up. Now this is also trade 1. We get 2 red bars here. I put my stop above the highs and I look for a break of liquidity. This is a 2.1. We get a break of liquidity, and then we get this nice bull bar. But this is a very low point to interact. I'm not too sure that this is actually going to continue higher. So at this point, because this is technically a trade 5, this is a head and shoulders. So you tink, 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 push, breaks below, pulls back, closes, and then pushes and breaks and fills my liquidity. I just got a really great 2.5 to 1 trade on this. Right? We have a break of liquidity. But it came really deep. I don't like to take deep trades because they tend to work out much slower if they work out. But this did work out swimmingly. You see here it actually came down, took out all this liquidity, and we would have had an entry right here, our stop here, and we would have been stopped out. This probably would have shown us that it's going lower. We would have gotten maybe short and then gotten stopped out on the high. So because this pulled down so deep, I would not have taken this long. Okay, here's trade number 8. Here's the big winner. This is the one that I love, but this actually didn't work out too great. Okay, we have structure, We have a pull down and an aggressive push up, and it immediately closes and drops through this. As I see this breakout bar, I'm going to look for long positions for a continuation higher. We break liquidity here, and I want to see us push higher. Okay, we get a candle close, it fills the wick, that's a bull signal to me. I'm going to enter here and put my stop below the body here and look for a new high to be made. Unfortunately, it comes up and it pushes here and pushes here right back into where our entry is. I would have closed this out and assumed that I was just wrong. But in the events that these do work, this is a 6.6 to 1. So if this works 50% of the time, you still make a lot of money on these trades, and they do work quite often. Here's trade number 7. We have small bar sell-off with an aggressive vertical push, a second push here, people got long, trade setup number 1. There hasn't been a liquidity sweep yet. Liquidity is swept, and this liquidity is swept. But this was a V-shaped attempt. This is a backwards check mark. So now I'm looking for longs. Here we have a bull breakout. I'm going to put my stop below the bodies, and I'm going to look for an interaction with here, which is also where liquidity is, which is a 3.5 to 1, and we get it. Trade setup number 3. Okay. 3-line strike, we have an order block right here. Okay, we have our strike 1, strike 2, and strike 3. It breaks below, it attempts higher. This is set up 4. We can go long here looking for an interaction with the order block. The order block is right here. Okay, we get an interaction with the order block. That's a 2 to 1. We take our 2 to 1 win, and then we get a rejection. We can assume that liquidity is going to reject this area. We can put our stop above the order block, and we can look for a break of the lows. This is a 1.47 to 1. If it breaks this, it should interact with previous liquidity. So we can target previous liquidity and give ourselves a nice 2 to 1. Okay, guys, that's all. 45-minute video. This is the last order block and structure trading video you will ever need to watch. I hope you watch it all the way through. Please do. This has helped me stay profitable, and you can skip through this video anytime you want to and look at these setups. These happen every single day. I don't need to take 1 or 2 trades per day. I can take 20 trades per day because I see these setups all the time. It's just about remaining objective, moving your stop once you're close to your profit target, and taking profits. Take profits if you move your stop up. If you're going to move your stop to break even, take profits first. Take 50% of the trade off. But only take your profits at 2 to 1 or greater. If your target is a 1.5 to 1, then you inherently are taking risk on, and you need to keep your risk on until you hit your profit target. Okay, guys, thank you very much. Peace out.